Morning everyone and welcome to the market right here on ET Now. I'm Avanne. Dubash with me and Anisha, Jain, and yes, we're in the thick of the earnings season and mapping out how the markets have scaled up and what a week it was. This one goes down in history as the Nifty managed to scale record highs in trade on Friday's trading day. Look at where we wrapped up the day at the highest point at a comfortable 21,894. We actually surpassed that level of 21,900 for the first time ever. So 4 straight days on the trot, and you did see us closing with a flourish on Friday's trading day. So clearly the mood seems to be fairly buoyant because you've had the benchmark outperforming the broader end of the market, and IT that was clearly in the winning spot. Remember, after all that's transpired in the year gone by within the IT space, there have hopes being pinned for a complete turnaround, and at least that's what we witnessed for the IT index, biggest gain since July 2020. You also saw outperformance then naturally coming in from the entire IT basket. The likes of HCL Technologies was among the top gainers in trade, and other than that you also had heavyweights that really contributed. So Infi, Tech Mahindra, TCS, Wipro, the entire cluster of course in the limelight on the upside. Other than that, heavyweights like IndusInd Bank, ICICI Bank, ITC and Reliance Industries were active in trade. Banks though, the Nifty Bank Index declined for the second straight week on the trot, while FMCG as well, that snapped its 4-week gaining streak. But all in all, the trend was on the positive side and the frontline indices clearly advanced. So it was a pretty stellar week gone by, Anisha.
Yeah, pretty stellar week, that 21,900 mark that we managed to deliver in the week gone by and sustained around that level. So it wasn't a big slip. But the question is, Nikunj, do you think it's getting a bit more over-enthused right now? I mean, we were talking about the kind of run-up that we have seen in the month of November, December. Where do we, go from here on?
See, let's understand what has happened in last 2 days. What has happened in last 2 days is that Nifty's got a real push, and Reliance has chipped in very smartly. And IT stocks, in a sense, there is a case for short covering. I won't use the word earnings re-rating, but there is a case for short covering. So large cap stocks were bereft of a trigger. They needed some hand holding coming from in sector, and they needed a leadership sector. Has the tide turned for Reliance? One. And are the quarterly numbers good enough for IT now to move it from is yet to come, but the contraction in the business is totally over. Now that's a very powerful narrative for the IT sector per se to happen. And then for Reliance, which in a sense has been a sleepy stock. So the combination of short covering in IT and leadership in Reliance is a very potent combination. Can it really take markets to a new high, which it already has done? So that I think really seems to be the setup on the table. This week, the real test would be more numbers, and then as we move into companies like capital goods, defense, PSUs, that's where a lot of market expectations and assumptions would be tested, because Touch would be off to a great start in terms of earnings so far because of IT and the kind of communication we've got in sense from others also.
Oh, well, yes, but you know what, for IT earnings, of course, the reactions on the stocks are a lot more exaggerated. But if it was a normal kind of environment, I would have suggested that these stocks would have moved anywhere between 2 to 4%. But it's just the market mood, which is right now very firmly tilted towards IT. Given the ownership that we had seen, the consensus was towards a neutral or a sell rating. So there was that room available. But talking about the earnings a bit more, Wipro ADR was up 18%, and that because the company reported a solid set of performance. As far as the Q3 numbers are concerned, the decline was limited to around 2% when it comes to constant currency. The street was expecting that there could be a decline of as much as 3%. So the positive being that it wasn't as bad as the street feared. There was resilience on the margin front as well, and overall the deal pipeline was healthy. The management commentary also pointed out to the fact that we are close to the bottom. For HCL Tech, it was a big beat on the top line itself, a 6% growth coming in on a quarter-on-quarter basis when rest of the IT companies have been reporting a decline. But do remember, for HCL Tech, there was an acquisition that scaled up. There was a large deal, Verizon, that scaled up. And of course, this is seasonally the strongest quarter for HCL Tech, and that's why that performance. But very strong margin show at close to around 19%. They've trimmed their guidance a bit, both the upper end as well as the lower end. But that's par for the course, given the fact that we are towards the end of the year and the managements have a lot more visibility. in terms of what is expected for the rest of the year as well. So commentary wise, yes, positive, but important to mark that they have said that discretionary spend still hasn't picked up. So that's something that you need to take cognizance if those stocks do rally 10 to 15% as the ADR move suggested. In fact, let me listen into what the managements of HCL Tech and Wipro had to say regarding the outlook and the situation on the ground right now.
Discretionary spending has really not picked up. It remains at similar levels like what we saw in the previous quarter. But however, having said that, there are always some bright spots where the spend is resilient, like cybersecurity is an area, SAP migration is an area, data. Now, a lot of customers are embarking on Gen AI programs to transform and evolve their data landscapes. So that is again a big opportunity area, and we see some opportunities in that space. So while the overall discretionary spend environment would be similar, there are some pockets where we believe there is strength, and we are focusing on that. And then the biggest opportunity continues to be hyper-automation, delivering hyper-automation, efficiency, productivity benefits to clients. And that's a big theme which is continuing to play out in vendor consolidation and cost takeout opportunities.
You know, there is typically January and February are very important in these industries for, getting a feel for how the industry or how the market will, turn, in the calendar year. I'm starting to have discussions to know how the budgets are from our clients, and I'll get a better view. But it's a possibility. Let's put it that way. We're not seeing the levels of slowdown that we were seeing in the past, right? So again, with caution, I'd say that that probably the worst is more behind than ahead.
Every quarter has its puts and takes. If you look at Q4, we're still not back to growth. Our guidance is -1.5% to a positive 0.5%. It is an improving revenue environment. Secondly, we will have 2 incremental months of salary increases that we will have to absorb. But that said, we've taken several initiatives, and some of that will continue to give us benefits in.
All right, there you have it. That's a word coming in from the managements of the IT companies. But just let's quickly summarize how the global markets as well wrapped up. The earnings have been underway. A lot of the big banks posted downbeat results. Do remember that the markets will be closed today on account of the Martin Luther King holiday. The Asian markets, well, Chinese markets have pared their earlier losses, and for the most part, we'll be watching out for China's GDP print, but it looks like it's a mixed print. Barring Kospi, though, all the Asian markets are holding out in the green. And lots to monitor as well when it comes to events back home. We'll be looking out, of course, for a lot of numbers this week. Heavyweights, the likes of HDFC Bank, Asian Paints, Indocin, HUL, Ultratech Cement. You've got Davos, which begins today. The WPI data and print will be coming off, and then the Tata Coffee as well spinning off, and the amalgamation. So it certainly is a busy week, Nikunj.
No, earnings will start, Avanne, and earnings in a sense, especially you will hear, let's say, from HDFC Bank. Very important. You've already got a sense in terms of where the banks are moving. You got to hear again from HUL and Asian Paints. Both are an indication of how the festival season has gone for Asian Paints, because the November was captured for Asian Paints in the last quarter. The Diwali was captured. And then you will hear from even HUL in terms of whether rural recovery is moving. So it's an important week largely from a market construct standpoint. See, market needed something fresh and new, and markets have got that fresh move from Reliance, and they've got a bout of short covering from IT. So frankly, if you look at the market in terms of positioning, will the leadership in Reliance continue, and will the short covering in IT go beyond like today? Because I don't think the numbers are so strong that the short positioning will become long positioning. Brokerages are unlikely to upgrade their targets extensively for IT per se. But yes, market needed a trigger, and it has got one, largely because of what's happened in terms of the positioning of IT and now a squaring up of those positions.
Well, yes, the trigger that it needed, IT companies provided that trigger, but what's been the commentary across the globe and what's the chatter about? Let's go across to Vinny to get the latest in terms of the global commentary. Hi, Vinny, good morning.
Good morning, and starting with some commentary coming in on Bitcoin, and this is from Peter Schiff. He's highlighting that volatility in Bitcoin surely continued on Friday as well. Over the weekend, what we saw was that, suddenly it saw a fall coming in. Now, what they are furthermore highlighting that given that Bitcoin ETF has now been accepted, they were expecting a bit of a further fall coming in Bitcoin. And in the crypto terms, they normally highlight something like HODL, which means hold on to dear life for the Bitcoin prices, and seems like that's what he believes that could not happen. And maybe even today, we could see a fall coming in. Other than that, we have the next commentary that's coming from Federal Reserve Bank's Chicago President Goolsbee, who is saying that financial markets seem to have, actually factored in and moved way ahead in terms of what they're expecting from the rate cuts. Interesting in terms of overall when they're highlighting that yes, interest rate cuts could be very aggressive this year. That is something that they should wait on to, because they are already factoring that in, and they're already saying that, this is something that will be happening in terms of an aggressive way. Lastly, ECB's Lane, who's highlighting that lowering the borrowing costs too early is something that could maybe impact the economy, and one should not get ahead of itself. Wait in terms of where the inflation is headed, and not already, factor in those points in terms of inflation as well as in terms of the rate cuts as well, and wait for it to normalize. Otherwise, that could again see a wave of inflation coming in if they reduce the borrowing cost and borrowing already in terms of that. So yes, that's the word coming in from Lane as well.
Thanks very much, Vinny, for highlighting all of that global commentary. Let's connect with our charters then and find out their views on the markets. We've got Kunal Bothra joining in our studios. Kunal, what a great week it was. 21,900 surpassed for the first time ever, and IT really making a comeback. What did you make of the setup?
I think as Nikunj put it perfectly, I think comeback of Reliance, short covering in IT, I think that was the only missing part for the markets. And I think one of the other missing parts for the markets in terms of momentum or in terms of a positive market sentiment is the underperformance of private sector banking names. Hopefully, if that also gets ironed out, we could probably be looking at a much more stronger bout of rally coming back into the indices. The Nifty managed to break past about the 21,700 mark, which was the hurdle which we were looking, which had happened for the banking index. We've actually seen the Bank Nifty OI dropping down, indicating that there's been major unwinding of short positions. So I think all of that data points, premiums coming back towards above average for both the indices, I think all of that indicates positive sentiment. We could now be looking at the breakout of the 22,000 mark, and hopefully in the index upping the base from 21,000 to 21,500, 600 levels.
Okay, so that's the index call and the big stocks which are making a bit of a comeback. But if I had to ask you for the top ideas right now, Kunal, what names come to mind?
So I'll go with two buy calls. IRCTC, in fact, is the first stock which I would suggest as a buy. The stock breaking past about the 925, 930 hurdle on Friday. Excellent momentum which was found back into the stock after the last couple of days of price action move. So would suggest a buy with a revised target of 1020 on the upside. Stop loss could be trailed high to 925. And Infosys is what I'm betting on. I think after that strong move which we'd seen on Friday for the stock, it managed to give a swing breakout, breaking past about the 1600 levels. So expecting another 60 to 70 point up move for the stock in the near term. 1665 as a target for Infi, and stop loss at 1585.
All right, there you have it. Watch out for some of those top trading recommendations from Kunal. Let's move right on then and discuss stocks in the spotlight. We've got Sumit here. Sumit, let's begin then by discussing Tata Consumer. The ET Now Newsbreak being confirmed that they're going to acquire Capital Foods.
Well, yes, a couple of acquisition, in fact, Capital Foods and Organic India. Now, it's a total 7,000 crore of acquisition that the company has announced over the weekend, and this new acquisitions would add close to 7 to 9% to the FY26 around revenue and on the EBITDA front, and is expected to be EPS break-even by the financial year 2026. Now, given that they have around 2,500 crore of cash in books, they would go ahead with a debt and a rights issue. Most probably they will be holding a board meet also for the same. Now when it comes to Capital Foods, now the brands like Ching's, Crude and Smith & Jones, now they are highly unleveraged brands, and TCPL's distribution, that is Tata Consumer's distribution, will take care of that, is expected to take care of that going forward. Now the products enables participation also in a fast growing industry, and the deal is also reasonably valued. If I see the FY26 EBITDA, it's just 17 times its FY26 EBITDA, while a lot of mid-cap consumer companies trade around 25 to 30 times their FY26 EBITDA. So the valuations are reasonable. But when it comes to organic foods, not everyone is too convinced about this acquisition or the revenue given the expensive valuation. But when it comes to Capital Foods, everyone on the street has given a thumbs up at least.
Changing gears, guys. I mean, they are just changing gears. They're moving into product categories, which in a sense are not the traditional food categories. Very, very different in terms of, what the Tata Group was versus what Tata Consumer would be. It's an expensive stock and they still have cash on the book. So looking at the fact that, Tatas in a sense have been very, very conservative in terms of spreading their wings. A large acquisition coming from the Tata Group in the consumer space means that is Tata Group back in growth mode. I mean, for me, that's one big thing because Titan acquired, increased their stake in the jewelry business which they had invested in, and now this is the second big acquisition which is coming from the Tata Group. Now in case of Tata Consumer, look, they're building a FMCG company with focus, with a very differentiated focus. So I think markets would say that they're entering into what could be called as niche but very high growth areas, and where distribution would be at an advantage to them. What I would be curious to see that what happens to the remaining fund requirement. I mean, will the right issue be a capital infusion where Tata Sons could chip in? The Tata Sons total stake in Tata Consumer is less than 50. So I don't think from a market standpoint, the whole issue that this is going to be having impact on the balance sheet of Tata Consumer, it will have impact on the return ratios, would actually play out. The stock is expensive. It's gone from 900 rupees to 1100, 1000 rupee plus, actually 1150, I didn't realize it. 1150 in a very quick jiffy. So let's see how the short term moves for Tata Consumer, but in the near term, but in the medium term, I would say that this is like a growth vector which they've added in terms of buying very niche and very popular brands now.
Yeah, growth vector to increase the growth going forward was a long time in the making, and finally it's out. One is more convincing versus the other, but let's see how the stock market reacts today. But Indigo is the other one. It's making headlines on social media as well as broken presses. People are complaining about the delays and the lack of communication. The brokerages are a lot more positive.
The delays are largely because of fog. And
yeah, but the problem is also with respect to the communication. Just saying that it's going to be 20 minutes delayed while the flight hasn't even taken off from their, initial destination. But nonetheless, what's the brokerage saying?
Well, we are not only discussing Indigo because UBS has come out with this note where they have hiked the target price to 3,700 from 3,000. But also do remember that Mr. Gangwal had last sold its stake in Indigo on August 16th, and there was a 150 days lock-in, which is now largely over. And given the fact that now earnings would be coming in for Indigo, we could expect a block deal coming in from Mr. Gangwal because that has been the trend by him, and we clearly know that he wants to completely exit from Indigo. So keep an eye out for Indigo for that fact also. And here UBS has increased the target price on Indigo to 3,700. Now they're saying that despite the supply crisis that Indigo has been facing on the aircraft side, they have been managing it quite well. They have been taking aircraft from wet lease, and also if you see in the last 6 months, nearly 82% of the total aircraft addition done by India has been done only by Indigo, which itself shows how well the company has been managing its aircraft issues. Now apart from this, crude price has been on the lower range. Air traffic in Q3 was very weak. Q4 is seasonally weak, and that's what we are seeing on the initial trend side also. Also air ticket prices have come off a bit, but that is a seasonality factor. But apart from that, everything seems to be very strong for Indigo, at least as per UBS. Nikunj, how do you see this? Do you expect anyone, or do you suggest anyone to add Indigo stock if there is some near-term weakness given the seasonality and the stake sale by Gangwal?
See, I think you have to realize that we're in a bull market. And then markets know that a stake sale is coming, markets are prepared for it. So in terms of all assumptions, I think markets are pretty much baking in that this kind of a stake sale from Mr. Gangwal, I think is going to be on the table, one. Second, I've always said, or I've been maintaining this view from last 1.5 years, that if you frankly ask me that, okay, airline has got a very notorious track record in terms of being a gruesome business, and it's a highly cyclical business. But in India for next couple of years, I think the airline sector is in a high growth environment. We know that capacity additions are coming. We know that Air India, which was supposed to be a potential threat, the scale up has been a challenge. We know that mid-tier cities are now getting added up. New airport economy is actually getting created. Indigo rules the market in terms of efficiency, and their market care, I think, is large. Now, yes, I know that they've got a lot of bad PR and everyone is tweeting, but that's pure. I mean, I've seen globally also during Christmas and during New Year's there are crowds which get jammed at Heathrow and JK, Jain and some of the best airports. Now, can you challenge the weather? You cannot. When you are managing such a large network, delays will happen. So in social media, things will get accelerated. But will that change the way how the company will grow? Will that change the profitability of the company? Will they lose market share given that it's been really tough for passengers? I doubt it very much. I look at the airline sector as a consumer sector for next couple of years where competition is not going to be large. Two large players, the desire to travel by air I think is real, and capacity addition I think is going to be large, and on top of that there are these small town destinations or tier 2 cities which are getting added up, where if you really maintain the right balance, I think it's got a great going. Also, you don't speak about it, the fact that they're going global.
Well, yes, they have been expanding into international. Their aim is to, in fact, grow international more than domestic.
Exactly. Now, that is something where if you just think about it, that I think is the next big theme which I think is coming in my book. We are talking about India becoming Atmanirbhar. Trust me, ladies, in next 3 years, the amount of Indian aircrafts which would be going out, and the fact that Indians will be not using global airlines but Indian airlines because of comfort, because of the routes and the connectivity and the experience they will give, I think it's going to be huge. So we talk about China +1, I would say this would be India +1, at least for the airline sector now.
Okay, that's interesting from...
that's my personal view, I think.
Yeah, we'll be getting
I think it does make a difference. I agree to that,
Yeah, we'll be getting accustomed to using Indigo now as the preferred airline for international destinations. Samit, thanks so much for highlighting those stocks. And by the way, it is a season as they celebrate Makar Sankranti. In fact, this is in line with our cultural diversity. The festival was celebrated with fanfare across the country.
Sanjeev Bhasin also joining us on the show to talk to us about which are the stocks which will be in focus today, and more importantly, what you should do with them. And Mr. Bhasin, if you're talking about stocks which will be in focus today, you have to start with IT, right? I mean, Wipro, ADR, if it's anything to go by, it was up around 17-18%. But once they do rally, let's say over 10%, do they become shorting candidates again, or should you even chase the momentum? What's the way one should approach IT now?
Well, good morning, Anisha. Wish you a very happy Lodi, Pongal, Makar Sankranti, and what a day!
So I should have started with that. You're right.
What a new, look at the new paradigm in the stock markets. Never say never, and particularly to those new PMSs who said we'll never touch PSUs, and the other said we'll never touch IT. Where are you? I have been saying Wipro, HCL Tech will lead from the front. When did you see a 6% move on the IT index? So all the hobnobbing will go on the side, all the weakness and the pessimism is all part of it. There was enough shorts to get squeezed. And I think Wipro numbers are going to see at least 550 come on this stock. As a disclosure, I have been covering Wipro on your channel. So in the stock market, never say never. Whatever you think is not feasible will get feasible over a period of time. And that is what IT has proven. Secondly, it has also set the cat amongst the pigeon that you are at 22,000, where naysayers last week were talking of a lower top. And so markets are all about fine tuning. I have been telling you from the last 10 days, it's the index which is going to make a move. Reliance started that. IT has been the real icing on the cake. And now you will have State Bank leading from the front and so on. So I think 22,000 on the index is there, but that's a fair value. We can choose your stocks. Wipro still looks good for 550. As a disclosure, Wipro has been one of our top picks. I was just hearing Nikunj on the commentary on Indigo. Well, if you can't buy Indigo, then buy Ashok Leland, because That is the bus which takes you from the aircraft to the terminal, and they are seeing a record inflow on buses. ABSL, AMC, another stock which I've been picking up for the asset management, hit a new high, and so on. So I have a couple of stocks. If you want, I can reiterate which I think are value buys at this time, and we still think that the broader market will be underperforming, but it's going to be stock specific from here on, because 22,000 is a crucial number which you have reached faster than we expected.
Okay, Sanjeev, so I see that you're in a very good mood. Let's find out what the outlook is then when it comes to HDFC Bank, because investors will be eyeing the numbers with a magnifying glass come tomorrow. What are you expecting?
So, Avanne, I've been in a good mood since Nikunj and I started the trend of dancing on the bhangra when I started coming on your channel. And by the grace of God, we've been hitting new highs. So the investors have gained. That's the main reason you, me, and everyone is here, so that the investor makes money. I think HDFC Bank numbers, we know that the merger will cause a little bit of pressure on margins, but that's part and parcel of such a big base. But I think the guidance and the volume-based credit expansion is very, very strong. I would lay more credence on State Bank numbers, which are again due, where I think the best ever numbers will be reported. Secondly, I would also give a look at Kotak Bank, which I think can come out with very stellar numbers, given that their franchise is doing extremely well. So some of parts, I think Bank Nifty is now poised to be a slight outperformer, but I would be overweight on SBI and Kotak rather than an HDFC, which has seen a sweet move over here.
SBI and Kotak, those are the top recommendations. And finally and hopefully that Bank Nifty will be
growth. They wanted to do the inorganic way. They've used their valuation, which is at a high. So when you do these at a high, you're using your market cap to the best advantage of an acquisition, whether it's cash or stock or whatever. I think it is fully priced given, but it has been an outperformer. Tata Consumer, Nestle, Colgate, all three have been relative outperformers. But we will wait for more color from the management on how the equity dilution will play out. Like I said, you are using your market cap at a new high to do this acquisition. Part of it will be played out well. Part will see return on equity fall. So status quo, if you have it, stay with it. Don't chase it. Rather buy a Marico or a Nestle, which I think can be an outperformer from here.
All right, fair enough. That's the view coming in. But what about the outlook then when it comes to the entire oil and gas space? Given that there are reports as well with respect to where crude oil prices are headed, what's your outlook then as to how you're reading into some of these stocks and the kind of moves as well that we've seen within the oil marketing companies and ONGC?
Yeah, so, Avanne, that is what the energy index is at a new high, which is what is startling, that both OMCs and the downstream, upstream refineries are doing well. I mean, look at where ONGC is now. It's at a new high, and so are HPBP. So I think the under ownership of PSUs is now coming to the fore. And I still think, there is a, by the way, look at MRPL, look at some of these, downstream companies which have come out with excellent numbers. So I think refining margins will be strong. And like I said, ONGC, but I think Reliance will take the cake here because they have put into their OTC business. They've invested. Now the return on investments will be sharp. Even though they just process soft crude, there will be higher margins this time. And their sum of part businesses make Reliance one of the large caps along with ONGC. We have Oil India and ONGC in our portfolio, which we are playing as a proxy. But we are also bullish on HPBP, IOC, particularly IOC. I think they will come out with the best numbers ever in the history of the company in this quarter.
Wow, best numbers in the history. We'll watch out for that. But of course, the big question is how much of it is already in the price, given that run-up that we have seen from October onwards. I think that stock has nearly doubled. But let's go across to Vinny and get a sense as to what DMart reported, because we did have the provisional numbers that didn't look very impressive. But on the margin and other parameters, Vinny, is there any sort of optimism?
So it seems like overall an inline set of numbers, just that, what a commentary that came in, and that's a bit of a green shoot there, that the general merchandise and apparel business, which has been quite subdued. Now seems like, that's stabilizing. So seems like the worst is over in terms of that, and that's why the margins have seen only a very small contraction of around 10 to 20 basis point. EBITDA margins have come in at 8. Positive move there. Pre-sales and pre-store revenue growth, that's a slight bit of a healthy improvement there at 5% as well. So yes, all in all, an inline set of numbers is what we could see coming in from the company. Non-FMCG business is lower than what was expected in the festive season, while FMCG business, the agri business, that's still facing some bit of an impact of higher inflation. So all in all, inline numbers, revenue growth of 17.2%, contraction in terms of margins, slight bit contraction there.
Yeah, in fact, Kunal, your take on Avenue Supermarts, it's not one of those stocks that traders look at, probably managing actively, but any trade within Avenue and even other FMCG names, if at all.
Yeah, so I think Tata Consumers and Godrej Consumers, they are the ones which are looking one of the best in terms of the charts. Tata Consumers specifically, the stock has seen almost a vertical as well as a consistent kind of an up move in the last couple of months. Godrej Consumers, I think, except for that one-day single correction of 5% odd, the stock has been looking quite strong. So that stock has also made a very slow, gradual and a stable recovery. So I think those are preferred names. Now, DMart on the other hand, the stock has been, when you look at this from the 2022 lows, when the stock was almost at 3,400, it's been making a pattern of higher highs and higher lows. The stock has been holding on to the support trend line quite well over the last 1.5 to 2 years. From this 3,400 levels for the stock, it's been trading above the 200-day moving average, and there have been many bouts of such corrections for the stock, but then somehow the stock has managed to take support this major trend line and then moved up higher. We would now be looking out for a breakout potentially of the 4,000 mark for DMart to get back into the momentum on the upside.
Kunal, just owing to the way the the IT stocks performed on Friday's trading day, what's the outlook on what's looking good on the charts today?
So I think the data for the IT stocks is very intriguing. There's been a huge amount of short covering which has happened for large cap IT names. It started off with Infosys, of course, then went across to TCS. We saw HCL Tech also seeing some bit of short unwinding. For Wipro, I think there was almost 17.5 lakh futures which were unwound on Friday's trading session. So I think the data itself indicates that the first round of short covering has started for these large cap IT names, and that generally is a trigger for a near term trend, because unwinding of short positions is a process for maybe another couple of weeks, if not more. Depends on how strong traders believe that the trend could be in the foreseeable future. So I would believe that we've just started off the first stage of a short covering rally across large cap IT names. I would believe that slowly and steadily you might see these stocks moving up by a margin of say 5% to 7% broadly from their Friday's closing, and I think that's where once the short covering gets settled out, then we need to see that whether there's good amount of delivery based buying, long beta formations.
Saying that post the recent correction, the stock is trading at 9 times the FY25 earnings, which is a 38% discount to the domestic peers. Your take?
Difficult to comment. Obviously, foreign brokerages will come out with reports because that suits their, themselves. And at this time, the company will go in all means to see that their image is rectified. But what comes out of the outcome would be very, very key, because corporate governance at this level is very key. This has been one of the institutional favorites. So obviously, there will be enough optimism and pessimism. Optimism for people who are using this decline to buy, and pessimism for those who are stuck with it. And I think that as the events unfold, it would be better to comment on that. So we would reserve our comments. It's an institutional favorite stock, and there will be both sides of the coin. But what it has done is it has told us that some of these valuation discomforts is now coming to the fore. And for whatever reasons, whether it's an IT raid or under invoicing, you have to be cautious there. Hence, we've been saying stay with the index. I think Reliance, SBI, ICICI, these are the stocks and IT which are actually more reasonably valued and which have enough leg room to give you comfort of staying invested and still being there when the party is on.
Okay, Mr. Bhasin, on that note, we'll let you go. Thanks so much for making time and speaking with us. But shifting focus to the sector which is going to be clearly in focus today, and that's IT, of course. Manik Taneja, the Executive Director from Axis Capital, who looks at the IT sector very closely, is joining us on the show. Manik, hi, good to be speaking with you. We have seen the kind of moves ADR is suggesting on Wipro, the kind of moves we saw on Friday on the likes of Infosys, etc. Do you really see that the Q3 numbers warrant such kind of move?
Also, first of all, thank you for having me on the show. The what seems to have happened is that companies have reported in line to a beat to the modest expectations, and that is driving the positive reaction to these stock prices. In addition to that, the investor feedback essentially has been that the sector has underperformed significantly compared to the benchmarks, and there is some amount of catch up happening with regards to the underperformance. From a standalone earnings standpoint, I would say earnings print continues to be mixed. At least internal seem to be mixed. While companies hoping for a better calendar year slash FY24, which to some extent is there in the analyst expectations, and thereby, at least from an earnings standpoint, I don't see an upgrade in the sector.
All right, fair enough. Let's also get in a sense from you then as to what the outlook is going forward. Going into the coming quarters, are you hopeful that we will see continued recovery within the IT space? Will it be very selective, or do you think across the board?
So if you think about each of these companies through the course of last 12 to 18 months, growth rates have kept on moderating. In fact, just a point in case or a case in point, Wipro has basically been seeing a sequential decline in revenues for each of the last 4 quarters. And going by what they are guiding for the March 24 quarter, will probably at best be flat revenue performance for Wipro. Now, in terms of whether things certainly improve or not, I would say uh, analysts and the street essentially continue to build in some kind of improvement going into calendar 24 and FY25. So if a Wipro essentially from a full year standpoint is declining by close to about 4% in FY24, the expectations for FY25 are about 4 to 5% growth. Thereby, uh, thereby there is certainly an expectation that companies do, at least from a rate of change standpoint, companies do well. The question that investors need to answer essentially is that are valuations already factoring in this kind of a rate of change?
Fair enough. Yeah, that's the big question that one needs to ask. But just before we let you go, Manik, what are your top bets within the sector?
So I'll be honest, with the exception of Tech Mahindra, which is rated positive at here at Axis Capital, we have reduced or sell ratings across the tier one coverage universe, and even amongst the tier two companies, it's KPIT and First Source which are positive rated for us with sell slash reduce across most of the tier two universe.
Okay, good to have you on board. Thank you so much for taking time out and giving us your perspective on the IT earnings. In fact, let's also take a look at some of the other mid-cap numbers. Lots of companies came out with results like Anand Rathi, Just Dial, etc. Let's take it across to Sharad. He joins in with the details. Sharad?
Well, yes, in the mid-cap earnings space, at first we are having Anand Rathi Private Wealth, largely inline set of numbers coming in. But if you look at the revenue and PAT, both of them have gone up more than 30% on a year-on-year basis. Interestingly, AUM has seen a strong jump, jumping up almost 43% on a year-on-year basis. And the equity mutual fund net flows also, that has also gone up by almost 5 times. Other important operational parameters have also stood strong. Apart from this, the second stock which would be in focus would be Just Dial, above estimates number coming in, revenue jumping up almost 20% on a year-on-year basis, but the margins, that has gone up from almost 12.3% jumping to almost 23%. Importantly, if you look at the quarterly unique visitors, that has also gone up by almost 4% on a year-on-year basis, touching the 16.6 crore mark. Also, the operational numbers have been good when it comes to the unique visitors as well as the sign-ups. Also, the third stock in focus would be Aditya Birla Money, where the numbers have come above the estimates. If you look at the revenue numbers, that has jumped 51% on a year-on-year basis, while PAT has jumped almost 74%. Importantly, the broking segment revenue has been an outperformer for the company, and that's why the numbers have come above estimates.
All right. Meantime, let's also get in a take then on the charts on some of these names. Kunal, come in on a Just Dial as well as Aditya Birla Capital owing to their quarterly performance.
Well, I think Just Dial has been a stock which has been very sporadic in terms of momentum. The stock has failed to give any major kind of a crossovers or breakouts. I remember, I think 1,100 has been the 2020-21 high for Just Dial. The stock had reached to those levels, then fell down to I think 500, 550 mark, and now it's come back towards the 800 to 900 zone for itself. So which means that the stock is trying to make a comeback, but then no major signs of revival as such in terms of a breakout. So we need to wait out for the stock, in terms of a breakout. But again, I think the point is that the stock is very, highly volatile. Even if it gets into a breakout confirmation, the breakout would fizzle out pretty quickly and the stock would get into a sharper period of correction. We need to see the change in beta nature for the stocks to try and get into a trending mode rather than just a breakout confirmation on the short-term basis. AB Capital, on the other hand, I think has been something which I've been bullish on earlier also. The stock, after a couple of days of trading below the 200 moving average, made a good comeback. I think it closed almost to the 179, 180 mark. Again, an excellent chart. The stock has come back after 5 months of consecutive correction. So it looks attractive at current levels.
Okay, point taken. So that's a take coming in as far as overall market setup is concerned in individual stocks. But let's also hear out the big voices, Vikas Khemani, Milind Karmarkar, and a lot more as to what they make of the market mood right now.
On IT, and I think the execution cycle will only pick up. And I've again said that IT is the best trade on interest rates coming down in US. The developmental spend will come, and as the execution accelerates of the order book, growth will come. We pivoted towards PSU banks because we think there's a big transformation happening. And as a result of that, we believe that PSU bank as a basket would outperform the private sector bank. And it is very natural for something like ICICI Bank, which has become 4x and everybody owns it. So to consolidate for a period of time.
When I'm talking of consumption, it includes finance, it includes pharma, it includes FMCG, it includes retail, it includes hospitals. So all of these would participate and grow significantly because it's very simple. What we are consuming today, maybe 6-7 years down the line, rather what the GDP is today, 6-7 years down the line, we will be consuming that much. So that is the kind of opportunity which, and more, because people will leverage and things like that. So that is the reason why I think that it will be predominantly be driven by consumption, but within consumption, as I said, there are different sectors.
Energy and manufacturing are the two sectors that are beginning to draw a lot more attention. So you will continue to see, in addition to the overall growth, which is infrastructure funding, which we don't directly keep looking at, that energy and manufacturing will be the growth areas in addition to our usual IT, ITES, fintech and healthcare, which is, let us say, the bread and butter of this business, right? To me, I think the sectors that look really super good are the safe ones, which is fundamentally, if you look at financial services, right, there is this digital public infrastructure driven opportunities. I don't think we have really seen more than just the beginning of
it. So I interact with so many investors. Everyone is just looking to buy IT stocks on every correction, every level. So it's not that there was extreme pessimism ever around IT stocks. So that's the reason why we actually saw many of the mid-cap IT stocks actually do very well, despite the fact that the large cap IT companies did not perform. Now, what's the story? The story is that growth might go from maybe 4-5% to 5-6% next year. Now, for this kind of growth, what's the kind of valuation you're willing to give to these companies that people need to decide? Now, there is an element of margin improvement which is possible next year as attrition remains under control and as wage hikes also remain moderate. So I think that's the only thing which could actually drive these IT stocks a bit more higher. Now, there could be different stories. Like, for example, if Wipro's a turnaround story and its valuations are now 30% below most of the larger IT companies, then there could be some mean reversion happening there. And to that extent, that stock could perform. But for the other companies, I didn't see anything to get excited about what most of the other people seem to be seeing.
So if somebody is having IT, time to sell, I mean, I'm spending disproportionate amount of time on IT because that would be the focus here today. Wipro ADR 18% higher. 18% higher on these numbers. And I rubbed my eyes, I said, ye kya ho raha hai?
Yeah, so I think people who are over-owned in IT, I think this could be a good opportunity to trim because as it is, markets are not cheap. So overall, within that basket, given the growth profile of IT also, they are not really cheap stocks. So I'm not buying IT for sure. And if they continue to rally, then it will be a good opportunity to trim.
Okay, it'll be a good opportunity to trade some of these IT counters if they do rally the way ADRs and their other, indicators are suggesting. But what did you make of this acquisitions that Tata Consumer has done, Sandeep?
The acquisitions are good in the sense that both the companies are very different what they have acquired, and there is growth potential given that the organic segment has an element of attraction today, and to that extent, organic India standalone was maybe not able to drive the growth so much. So it's possible Tata Consumer could drive growth, and even for the Ching's basket, those are good products. Now, the only question mark will be on the valuations of the acquisition, drive the margins of the acquired businesses. So that will determine the near-term impact. Longer term, I think the companies they have acquired have growth potential.
Okay, so that's a growth potential which opens up for Tata Consumer. Of course, how they manage to execute these and grow these businesses, something to watch out for. But the other space which has been a bit on the back foot, Sandeep, is the entire FMCG space. And I'm talking about your core staples, and even the retailers, the likes of DMart, etc. With the initial green shoots being talked about by a couple of companies like Marico, etc., do you think it's good time to start buying some of these names for that eventual recovery that might happen, let's say 1 quarter down the line, but the valuations are comfortable?
Yeah, I think I didn't ever say that we could actually see the consumer sector as a sort of contrarian sector, but that's the scenario today, where these are the stocks which have not actually performed. Consumer demand has been muted, but a revival should be imminent as inflation comes under control and consumption actually picks up going forward. So I would agree with that. Now, given at the overall, looking at the overall market construct, where market is at nearly 22,000 levels for the Nifty, the return potential of the Nifty itself now becomes low for this year. So in this context, if we can get some consumer companies which can even deliver 12 to 15% return, then it will be attractive return for this calendar year.
83 points higher for Nifty. It's going to be just one of those days where we would really be seeing a lot of follow buying in terms of IT also. We saw a hustle and bustle even in PSU banks on Friday, smaller ones. Is that trade opening up again?
Yeah, that trade is opening up again, Nikunj, and I think many of the PSU banking stocks, like I was looking at the charts for Dhanlaxmi Bank, Central Bank of India, Union Bank, etc. Many of these stocks, they've managed to give a strong confirmation breakout. So what had been happening over the last, I think, 2 months or 3 months or so, these stocks had gone through a very plateaued kind of a price movement where they were just stuck into a more or less a trading range, no major price movements or trends emerging for these stocks. The moving averages had flattened out for these stocks, especially the 50-day moving average had flattened out for many of these stocks. So, we were getting into a point where there was an anticipation that maybe this consolidation may continue for some more time and we'll eventually have to wait out for the signs of breakouts. And the classic was the lack of strong participation coming from the likes of Bank of Baroda, maybe some lack of participation which came back into an SBI, because these two stocks are one of the stronger ones from the PSU banking names, but they are nowhere close to their previous swing highs. So when you see mid cap and the small cap end of the PSU bank stocks coming out of the consolidation, you would ideally expect that the large cap names should also participate and maybe give a fresh lease of a breakout, but that was not the case which we'd seen on Friday.
Okay, so that's about the PSU banking names and which are the charts which are looking better than the rest. But let's bring you an ET9 exclusive, and this is a big one. We learned from reliable sources that Biocon has initiated talks for potential stake sale in its biosimilar arm, which is Syngene. For more details, let's go across to my colleague Shrishti. Hi Shrishti, good morning. Tell us, what are you picking up?
Very good morning, and first of all, yes, Biocon is in focus as our sources tell us that the company has initiated talks for a potential stake sale in their biologics arm as well as their research division, that is Syngene. This is what our sources tell us, and the company will be utilizing this particular money to par off some of their debt that is there in their books. The company will use the proceeds to reduce their debt, which as of September 23 stood at around 17,000 crores. And the company also has done and par off some of their stakes in both of these divisions in the past as well, because as for their biosimilar business, the last stake sale valued this business at a $6 billion valuation. Serum Institute of India has come out with a deal where they have gone ahead and valued this particular business at a $6 billion valuation, and Biocon actually holds around close to 70% stake in their biologics arm. And similar is case for the Syngene as well, wherein Biocon holds around 54% stake in this research division, and in the last stake sale wherein Biocon went ahead and sold around 16% stake in their
Have somewhere to run.
Okay. We saw a move in ONGC also, Kunal, on Friday. Anything looking strong there? I think we've discussed this one a couple of times, right?
Yeah, and again, I think this was a stock which had seen a maximum amount of open interest built up. So I was actually looking at the charts for OI built up, and for ONGC, there was almost an 18% jump in the cumulative open interest for the 3 series, which is there on the futures, and that's a phenomenal kind of a move for a stock like ONGC, which has been typically very low beta. But then I think the stock has been going into a slow, steady, gradual uptrend. So on a single day, when you saw the stock moving up by 5%, 5.5% margin, and then an 18% jump, it indicates a fresh bout of participation which has come back into ONGC. The stock scaling past about the previous swing highs. I think 212 to 14 was the previous swing high for ONGC. The stock managed to break past about those levels, and the confidence with which traders are carrying forward their long positions into the stock, even at a fresh 52-week high and a breakout of the previous swing high. I think all of that indicates that we could be looking at this trend continuing for ONGC for some more time. 210 to 12, which was the previous breakout approximately, that would now become a support for ONGC. So for traders who are carrying forward long positions, they may keep that as a stop loss and continue to hold longs.
So that's about ONGC. Continue to hold on to your longs. But Kunal, a quick take on Zomato as well. A large trade just happened, almost 4.5 crore shares. But chart check wise, where do you see this one headed?
I think now the stock is inching very close to the all-time high levels. I think 160, 165 approximately. So what I like about the charts for Zomato in the last 2 months specifically was there was an initial move towards 120 mark. It was in the back of some extremely strong volume, some sudden price movements. Then from 120 to 140, the price movements have been very slow, steady and gradual. So there is no major built-up of volume formation. So it's the inertia move, where the stocks move on from one range to the other range, upping the base for themselves. So now I think that's a classical sign of trends coming back and more consistency coming back into the price trends. This is generally a precursor where the stocks break past about the previous life high levels for themselves. So I would probably believe that hopefully in the next 3 months or so, we could be looking at Zomato coming back or at least retesting the previous highs of 160 plus.
All right, there you have it. That's the view on Zomato. And Sandeep, before we let you go, lots of focus on PSUs all of 2023. What's your call for this year when it comes to PSUs across the board?
I would say a large part of re-rating is done. Now the stocks have become trader favorite.
300 odd points is what the Sensex is indicating after a pretty healthy move on Friday's trading day, hitting record highs. So Kunal, what's your take in terms of your mid-cap call?
So that will be a buy on one of the stocks which I've been bullish on earlier, AB Capital. That's a stock which I think on Thursday specifically made a comeback towards a fresh multi-month breakout, coming back above the 200 DMA, as well as excellent volume and OI participation for the stock, which we've seen on that single day. And that generally is an indication that maybe we could be looking at a fresh bout of uptrend momentum for the stock. 190 as an immediate target for AB Capital is what I would spot. Stop loss to be kept at 170.
Okay, so that's the latest coming in on AB Capital. But time now to tell you what's the news across the globe as well, and what's the news fatafat coming in. Let's start with what's happening in Davos itself. More than 2,800 leaders from across the globe will gather in Switzerland's Davos for the 5-day event, the 54th Annual World Economic Forum. The discussions are likely on various political, business, cultural and other issues regarding the world society as a whole. In the meantime, Citigroup has announced a 10% cut to its workforce amid efforts to boost the lender's earnings as well as the stock prices. The 10% cut will amount to 20,000 employees who will be let go over the medium term. Remember, the group had announced a similar quantum in job cuts last year as well. Sticking with the world banks and the leading ones at that, Goldman Sachs forecasts that India's affluent class will reach 100 million by 2027. The brokerage firm is bullish on leisure, jewelry, out-of-home, food, healthcare and premium brand segments. They have classified the top 4% of the working age population with per capita income exceeding $10,000 annually as affluent India.
Meantime, North India is chilling, and how? At 3.5 degrees Celsius, Delhi has recorded its season's lowest temperature. The Met Department has predicted that very dense to dense fog conditions are expected to continue till Tuesday. More than 100 flights and 20 trains have been delayed due to the dense fog condition in North India. And meantime, a fire broke out in a high-rise building in Kandivali in the wee hours of Monday. The blaze reportedly erupted in a 23-story residential building. Several fire tenders were rushed to the spot after receiving information about the incidents, with the rescue operations underway.